broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We're starting a new week, hopefully a quieter week as well, one with a midweek holiday. Yes. I checked. It's Thursday, right?
Yeah.
All right, we're just starting the week. I'm Prashant. With me is Surabhi and Nigel. And of course, we're coming to you live from the CNBC-TV18 Motilal Oswal studios. Guys, had a restful weekend. Surabhi had a musical weekend, right?
I think after all the music that we heard from central banks, from the finance minister and whatnot, I thought, okay, let's just kind of end it with a song.
Nigel tells me otherwise.
Yeah, no. Surabhi is the biggest rager among us. But it was a good weekend, nice, pleasant.
And no news, no one blowing up, no catastrophe striking the world, right?
Weather wasn't too bad as well.
Yeah, weather was good.
Actually, nights were good, actually.
Yeah.
So I had a great...
Nigel was out.
I had a great
smile
weekend.
says a lot. Later, post the show.
I had a good weekend.
All right. But I think, Surabhi, what you said, I think, is the headline, which is that there is no news. There is no news. And no news is good news. Last 2 weekends, we've basically had 2 crises and 2 bailouts. I mean, if you remember, the SVB saga played out over that Friday, Saturday, Sunday. We came back the Monday before last with news that the government has stepped in to protect depositors. The last weekend was the Credit Suisse UBS weekend. So, in a way, it's been busy the last 2 weekends. And the week after that has also been extremely busy with huge amount of volatility. Although, I mean, end to end, Friday to Friday, the change has not been so much. So this morning we start with nothing. No weekend crisis, no weekend bailout, and I think markets will take it. US, by the way, the last I checked, the S&P E-mini contract was up about 0.4. It's a gentle kind of slightly higher start, which is good. US on Friday was up 1%, but Europe has had no such luck. Now, European markets, and the changes will come up. The Euro Stoxx 50, which is the sort of index of the top largest 50 stocks in Europe, that was down almost 2%. Deutsche Bank was down 8.5%, and the largest banks index was down almost 5% or so. There was no news flow per se with regards to Deutsche Bank, but CDS, the credit default swaps went up, shares sank. Just generalized kind of fears. Who's next? And I perhaps suspect that there may have been some weekend hedges, etc., taken as well. Given the experience of the last 2 weeks, what if we come back on Monday morning with a completely different kind of situation with regards to Deutsche Bank? That's not played out, and I think that's good news. Markets are generally unsure about whether they need to worry about European banks. By the way, we had commentary from the Eurozone regulators on Friday saying that European banks are in much better shape. There is nothing to worry, etc. But in times like these, affirmations by the regulators don't amount to too much. So we'll see. In the US, it's looking better. The US 2-year yield is down 130 basis points in the last 2 weeks. It's down from 5.08% to 3.79%, which is good news, which is great news. But the question is, are markets once again, and this is, I think, the third or the fourth time, underpricing the level of policy rates this year? Markets go, and this is, of course, on the back of the banking issues, and we had the Fed meeting last week, etc. So are markets suddenly underpricing where rates in the US will be? Some believe so, some believe yes. Markets have done this and then priced back the hikes very quickly. So we'll watch for this. But generally speaking, on the banking crisis side, things in the US seem to be looking a little more settled. Here in India, of course, we had that mini budget on Friday with all these tax changes, and that did sour sentiment a little bit. We talked about this. It's not so much about the impact, but largely the fact that so much was done, which was not thought about, or at least did not find place on the 1st of Feb, but 6 or 8 weeks later, you got so many other changes which one has to deal with. The Nifty is very close to once again retesting the sort of 16,850, 16,800 kind of levels. We had 2 solid tests of these levels, which were successful. The market bounced off very sharply. Will we be a third time lucky is the question. And I think a lot of it will depend on the global situation, etc. as well. I mean, if you have relentless pressure from global markets, it becomes difficult to hold on to these levels. If not, I mean, given the extent of underperformance in India relative to other markets, we're oversold, relatively speaking, to some of the other markets. On the way up, Nifty will find resistance at the recent swing high of 17,207. On the bank Nifty, I mean, it hit the 20-day moving average on Thursday, not on Friday. And then from exactly there, it sold off. Low of 38,613 is the big one, which Bank Nifty needs to hold. And on the way up, I mean, daily averages come into play. The 20-day, for example, on the Bank Nifty, which is the near-term one, is at about 40,126. As I've been saying for the last so many days now, let the market tell you what it wants to do. Don't preempt. And if you want to trade, I mean, at least give yourself 1 hour to just see the kind of price action. It's a new week after all, and then kind of take positions one way or the other. The SGX is indicative of a 0.5% higher start, 17,011. Surabhi.
Prashant, yeah, and this is interesting. It's not bad at all, considering some of the markets in Asia are actually down. We're looking at declines of about 0.5%. Hong Kong, by the way, is down 1.5%. So given that, this seems to be a pretty decent level for the SGX to track. Let's see how this goes and how much of that optimism we can retain as we get into our opening. Just a point on some of these banking issues, just recapping, it's been a week of hectic central bank activity. So we had ECB, we had Fed. We also had the Bank of England raising rates by 25 basis points, and the Swiss National Bank itself raised by 50 basis points. And this even as data continues to be red hot. Inflation numbers out of UK have been pretty significant. And we had the flash PMI number out of the US for the month of March. So I just want to recap that and put it on the table as well. That reading was 49.3. versus 47.3 month on month. The estimates were 47, but what we got was 49.3. So therefore, the data continues to be very hot. Central banks are tightening, and that leads us to the simple critical question that as this tightness continues, will we see any more asset liability mismatches? At least for the time being, that's what caused SVB and that crisis. And more importantly, as we get into sort of the more macroeconomic impact of these higher rates, will there be some credit issues as well at some point in time? And that's something that markets are grappling with. And therefore, perhaps the confusion that keeps leading to the sharp sell-off in bank stocks, the way we saw in Europe with Deutsche Bank on Friday. Just want to sort of remind viewers as well that what led the market to turn around. Remember, Europe closed quite low. Wall Street turned around because we had a statement coming in from none other than the German Chancellor himself, saying that don't worry, everything is fine. This is a very, very profitable bank, which it is. I think 9 consecutive quarters of profit. Their CET1 ratios are at a very comfortable positioning. Their net income for 2022 was substantially higher. This is Deutsche Bank financials, obviously. So anyway, that kind of got the markets back from the edge, so to speak. Just a word on fund flows. While all of this confusion continues and we have no clarity on which way global markets really want to head right now, the numbers for Friday, these are, of course, provisional numbers that came through. The negative from FIIs was more than offset by domestic institutional buying. And for the month of March, as of now, a lot of these huge block trades that we are getting on a daily basis, they've kept the monthly net inflow number still positive for March versus a negative number for January and February. We're up by about 7,200 odd crores in the month of March. This is the final data from the depositories. So that's the silver lining. The range, of course, Prashant has mentioned. And Nigel, I guess for the Nifty, it's a little more tentative because we are, still closer to this zone of 16,825 to about 850. Bank Nifty is still a little distance away from the lows that it hit in the chaos, last week. But I guess the best case scenario probably would be maybe a range trade, at least hold the range and not break it from the downside.
Well, Prashant mentioned that we have a truncated week, right? That would mean that expiry will be one day earlier. Yeah. Because expiry would have been on Thursday. It will be actually on Wednesday this time around. So the next few days will be quite volatile. And as you said, the bulls will want to hold on to those lower levels at 16,850 odd. Now, if you pull up the SGX 50 and the Nifty futures, the SGX 50 suggesting we're going to see a big gap up. It should be to the tune of around 50 points, just going by that, because you compare the SGX Nifty with the Nifty futures, so it's not 180, 100 points odd. It's more like 40 to around 50 points odd. But the Nifty is prone to selling at higher levels, as we've been seeing on a day-to-day basis. Now, it's crucial for the bulls to protect the recent low. The Nifty bank, though, getting back to around that 200 DMA, that's what will give some bit of hope, and that holds the key as well. The problem is in the broader markets. Even in Friday's trading session, everyone's focusing on the Nifty ending at the low point of the day. The small cap index took a harder knock. The mid cap index was down The small cap index was down even more. So the breadth of the market needs to improve because portfolios are getting absolutely hammered. That's the mid cap index. Pull up the small cap index as well. That was down close to 1.7% odd. So pain in the broader markets. What do the FIs do? Well, after a while, we saw them adding more longs than shorts, mildly so though. 7,000 long contracts, and that's why the short positioning from around 92%, it's come down to around 87% odd. On the index option side, well, they're writing calls, and they're writing calls very, very aggressively. Close to around 3 calls were written for every 1 put. So let's pull up a couple of strikes. 17,000 calls, 17,100 call. Between them, they added close to around 80 lakh shares odd. Getting into expiry week, there was aggressive writing being seen out there. But for the bulls, what's giving you some hope is there was some put writing as well at around the 16,800 and around 16,900 put, which brings us to the levels, the crucial zone, 16,800 to 16,850. Well, that needs to hold out. On the upside, going by the options data, the 17,100 to 17,150, the bears are positioning it in such a way that we don't get past the 17,150 odd mark. The Nifty bank needs to get to around the 200 EMA to give the bulls some hope, and the 200 EMA comes up for you on the screen. My guess is that, in fact, today, the Nifty opens higher, but that is likely to get sold into. So don't chase the opening. If you want to get in, buy the intraday dip and keep your stop loss at around that 16,800 to 16,850 odd.
All right, Nigel, thanks very much for that. Now, levels to watch, the action from the futures and options perspective as well. Well, let's get this going. Before we start, though, let me quickly tell you what's lined up in the first 30 minutes of the show today. We will get you updates from markets across the globe. Matt Orton of Raymond James Investment will join us to discuss the setup. Later, our research team will bring you CNBC-TV18's list of top 10 stocks for the day. At about 8:30 this morning, we'll do a fundamental stock check with our market expert, Prakash Diwan.
Okay, well, let's quickly move on to the equity call of the day. Sanjay Mukim of JP Morgan says a sharp reduction in current account deficit has reduced macro concerns, and an improving macro situation is good for banks. He says lower commodity prices are good for consumers, while he prefers staples and two-wheelers. He says they're overweight on Bajaj Finance, DLF, HUL, ICICI Bank, L&T and Power Grid. JP Morgan is underweight on Bharti Airtel, Escorts, Pidilite, Shree Cements and TCS.
Gautam Dugar of Motilal Oswal Financial Services says the market will remain volatile in a limited range and global cues will decide market direction. He says they do not expect any major downside in the near term, and the fourth quarter result season will be the catalyst for the market. They are bullish on banks, tech stocks, autos and select consumer names. With respect to stocks, they like ITC, Infosys, ICICI Bank and Mahindra & Mahindra. All right, let's get you some money market views as well. B. Prasanna of ICICI Bank has got a view. He says the risk-off environment aided the dollar to regain strength against emerging market currencies. He says the rupee remained resilient on strong year-end inflows and recouping of reserves by the Reserve Bank of India. He adds softening crude, improving current account deficit make the rupee outlook positive in the near term. And he's expecting the dollar INR to trade in a range of between 81.8 to 82.8 to the dollar for the week.
Okay, and on bonds, B. Prasanna says dovish hikes by FOMC and ECB have led to terminal rate expectations getting repriced lower. He says local bond yields softened with steepening bias tracking global yields. He expects the market to trade with a positive momentum and expects the 10-year benchmark to trade in a band of 7.25 to 7.4%.
All right, we've got a lot of stock-specific action that we're tracking for you, and we'll get to that in just a bit in our special Top 10 segment. Well, we're looking at Crompton, Butterfly Gandhimati, Dalmia Bharat, Paytm, Bharat Electronics, you have Campus, Activewear, Lupin, as well as Olympic. All of them will be reacting to positive news flow, while you have a couple of stocks like Sun Pharma and SBI Cards, which will be reacting to negative news flow.
All right, we'll get to the stocks in a bit, but let's get the global loop closed. Matt Orton is Chief Market Strategist at Raymond James Investment. He's joining us now to take some questions. Matt, great to have you with us here. Thank you very much for your time. The U.S. situation on the bank side is looking a little more settled. I don't know if you can sound the all clear. But in Europe, banks are still being sold. Deutsche Bank was down 8.5%. Will those worries carry over and fester with the same intensity this week as well? And is there really an issue, or is this just sort of panic, generalized panic? What's your sense?
Hey, good morning, Prashant. Great to see you. I think the all clear is not ready to be sounded yet. There's still a lot of uncertainty out there. And one of the main takeaways that I had from the Fed's rate hike that we got last week was uncertainty, in that it was great to have affirmation that they were comfortable enough to hike interest rates by 25 basis points. We had the same thing from the ECB the week before, and we've seen that from other global central banks, like you mentioned earlier. But there's still a lot of unknowns that are out there, and it's uncertain how the market is going to react to that. So while I don't see any broader systemic concerns, when you look at the Fed's balance sheet data that was released last week, it doesn't seem like there's been any uptick in usage. It was actually flat over the past week, which says that the concern of systemic issues or contagion isn't there. And you're seeing that out of Europe as well. So even though I don't think that you're going to see these broader issues, the market is in kind of a point and shoot attitude. Any whiff of uncertainty it gets, whether it's right or it's wrong, it's going to go for an attack. And so that's why when I've been talking to clients over the past couple of weeks, the refrain is constantly remain defensive, lean into quality companies where there's earnings stability, visibility into free cash flow and what the earnings are going to be going forward, and don't chase the market higher, don't chase rallies, and also don't try and buy the dip at this point. It's much better to sit tight, let the dust settle, and then pick your levels at a time where there's more clarity moving forward.
Okay, fair enough, Matt. I just want to ask you, what do you think, will it take to get the market to move beyond the nervousness? Look at what happened to Deutsche Bank on Friday. Despite what regulators are saying, what heads of government are saying, the market just remains jittery. Though there was no specific reason, apart from the CDS rates pushing higher, there was nothing immediate. But this panic, it seems to be just continuing on and on. So what will it take for the market to move beyond this?
Hi, Surabhi. I think it's going to take more economic data, and it's going to take earnings season coming forward. We have to hear from a broader diversity of management teams outside of just some of the banks that are under attack or the CEOs of some of the largest financial institutions around the world. We have to get clarity and visibility from management teams in terms of what they're seeing the state of their business is going to be going forward. And the data that's been coming in lately has been strong. It continues to point to the fact that even with all of this bank uncertainty, that we're still seeing strong jobs market. The jobs market remains tight. The manufacturing PMI, like you pointed out, was stronger than expected, and expectations were much stronger than expected. And I think that's a key takeaway too. So it's going to take a little bit more visibility, and we're not going to get that until probably 3+ weeks down the road when U.S. banks and some other industrial companies start to report earnings. So I think we're going to be in a range-bound, volatile market for at least the next couple of weeks. And again, that's why keeping that defensive bias and not chasing the market in either direction, I think really makes a lot of sense, because we're going to see we're going to see highs, we're going to see lows, and we just need to wait and see how it plays out.
All right. Hi, Matt. Good morning. Sit out, be patient, position your portfolio defensively. Matt, my co-anchors keep reminding me that 2008 as well, suddenly things went south. This time, is it looking anything like that? Or do you think, we are far away from something like that, a banking crisis, or you see a lot of stocks really correct big time? What's your take? 2008, very different from what we are at currently?
Nigel, we're very different from 2008. And I think context matters a lot, because when you look at where we're coming from, we are coming from a place of economic strength. We're coming from a very, very tight jobs market where companies are actually hoarding labor because they haven't been able to get the employees they need really for the past 3+ years. We're coming off of some of the strongest earnings momentum we've had over the past decade. And so naturally, you're going to slow down. Where we're going to slow down, not just because of where we are in the cycle, but also the credit issues that have come up through the rate hikes are going to weigh on the economy. But the fact of the matter is that the consumer in the US and the consumer we're learning globally is in good shape. And at the same time, China is reopening. People are going out and spending more money and starting to travel. And you're not seeing any deep cracks or fissures in the global economy at this point. There's certainly areas of concern, but I can take solace in the fact that things look good medium to long term for where we are. We just have to get through some of the short-term uncertainty. And again, that's why it doesn't make sense to chase things in either direction, because we're going to have a good opportunity for the market to come to us and for us to reposition ourselves for that more optimistic medium to long-term outlook going forward.
Okay, all right, Matt, thanks so much for stopping by and giving us those inputs. So maybe, in fact, not a good idea to chase the market higher. Better to sit out in the near term. We could be bracing for a time-wise correction. And also, Matt, taking that point, 2023, very different from 2008. Well, we'll slip into a short break, but we gave you a bit of an insight into the top stocks that we'll be tracking. When we come back after this break, we'll go full tilt on all of those stocks. Stay with us.
Well, the SGX Nifty is looking quite okay, still retaining that gain of about 0.5% despite unease in some of the neighborhood markets. Let's straight away take this to our list of top stocks to watch out for this Monday morning. And our research team is standing by with all the details. Guys, good morning and happy Monday to all of you. Ekta, welcome back. You're starting off with a bang. Sun Pharma, I mean, there's news about this ransomware attack, IT attack. What's going on?
Well, yes, further to the company's intimation on March 2nd with regards to an IT security incident, they have informed the exchanges further to that the revenues are expected to be reduced in some of their businesses on account of this. The company is going to be incurring expenses in connection with the IT incident and the remediation, and currently they are unable to determine other potential adverse impacts of the incident at this point in time as well. So this is definitely going to weigh on Sun Pharma, but there is more news with regards to Sun Pharma. So they will be acquiring 60% shareholding in an Indian animal healthcare company, Vivaldis Health and Food, for 143.3 crores. So that's another piece of news. And Credit Suisse has upgraded Sun Pharma to outperform from neutral, target price 1150. They are very bullish on the specialty sales. They expect it to double in the next 4 years. So maybe a little bit of the negative impact could possibly be mitigated by these two other pieces of news. But nonetheless, negative for Sun Pharma. But the street is probably going to look at it on a larger scale, that yes, it is not really something which is brought on by Sun Pharma. It is possibly you need to look at it for growth in their specialty business on a longer scale. That's what analysts are saying. So maybe this news could eventually also be brushed off.
Okay, all right, Ekta, thanks a lot for that. Well, let's hop across to Surabhi. She's joining to tell us about a couple of stocks that she's tracking, Crompton as well as Butterfly Gandhimati. Surabhi?
Over the weekend, Crompton has announced merger of Butterfly Gandhimati with itself. Now, just to alert, a year ago, Crompton had already picked up a controlling stake in Butterfly. Now, the scheme is subject to regulatory approvals, but if it goes through, the shareholders of Butterfly will receive 22 shares of Crompton for every 5 shares held in the company. Post this, the shareholder of Butterfly will hold 3% stake in the combined entity. Now, the indicative timeline for completion of this merger is 12 to 14 months. According to Crompton, the merger will unlock full potential of the combined business and enable faster execution of its go-to-market strategies. It will also enable a more efficient use of capital allocation and lead to simplification of its corporate structure. Crompton expects the merger to be EPS accretive from the first year of its being effective itself.
All right, Surabhi, thanks very much for that. We'll keep an eye out on those names. Nigel, Dalmia Bharat has got news flow?
Well, that's right. Dalmia Bharat, they are doing what they said they'll do. They'll exit all their non-core assets and they want the company, the listed company, Dalmia Bharat, to be a pure cement company. So they've made another move in that direction. So they've divested close to 42% stake that they had in Dalmia Bharat Refractories Limited. The party who's buying it is a promoter-related entity. The consideration will be close to around 800 crores, and they're expecting this deal to get done in the next 30 days or so. They've given the payment timelines as well. They'll get 20% upfront, that's around 160 crores. The remainder they'll get via NCDs, and these NCDs will give an interest rate of around 8.5% odd. The key reason for sale is exiting the non-core assets. I'll tell you a couple of other positives as well, because there was this report that indicated that maybe they're looking at bidding for a non-related business like a tire business. And they could possibly do this now via the promoter entity. So that clears the air as well on that front, because the street was a little bit nervous out there. Exiting the non-core business, they'll get some money. And also if they're going to do some, unrelated business, it'll be via that entity. So I'll read this as positive.
Company.
Yes, positive.
Okay, so this sounds like a thumbs up on Dalmia Bharat. We'll watch out for this stock. Abhishek is coming up with some news on SBI card as well as Paytm. Abhishek, morning.
Morning, Surbhi. So, to begin with Paytm, they have sought extension from RBI for submission, resubmission of their application with respect to payment, Paytm Payment Services Limited. So, RBI says that they can continue with online payment aggregation business. They await approval from Government of India for past investment from OCL into the payments business as per FDO guidelines. So, once Government of India approves Paytm, will take 15 days, or within 15 days they will submit their re-application to RBI, seeking authorization of Paytm Payments Service Limited to operate as an online payment aggregator. So right now they can continue with their online payment aggregation for their existing customers, and they cannot onboard new merchants. Now we have credit card data for the month of February from RBI, which suggests that the sectoral data, total credit card issuances is up 1.1% month on month and about 16.3% YOY. However, overall spends are down 7% month on month but up close to 38% YOY. Average ticket size, that's down massively by 8% month on month and up 18.6% YOY. Perhaps, the RBI's rule in terms of, paying the rent via credit card, now that's impacting the overall spends in the credit card business for the sector. So for SBI card, the total cards issued is up 1.8% month on month and more than 22% YOY, which is strong. However, the total spends are down more than 9% month on month and up 36.4% YOY. And average ticket size, that's down massively by 11% month on month and up 11.8% YOY. So we need to see how this rental removal from RBI with respect to a person paying their rent via credit card, how that has impacted is being seen right now. Back to you.
All right, Abhishek, thanks very much for that. Paying rent via credit cards. And of course, the tweak, as Abhishek pointing out, may be the reason for the sharp downtick month on month in terms of ticket size. We'll come back to that with more details. Well, BEL and Campus Activewear are two names which we're going to put the spotlight on. Surabhi's got details. Surabhi, hi.
I'm also watching out for Campus Activewear and Bharat Electronics. Let's start with Campus Activewear first, where on Friday, TPG divested 7.6% stake worth 806 crores. Now, this was picked up by Societe Generale, who bought 1.3% stake, close to 41 lakh shares, and Fidelity Emerging Markets Fund and International Discovery Fund, who bought 33.4 lakh and 17.1 lakh shares respectively. Bharat Electronics won orders worth 4,300 crores from the Indian Army and Indian Navy. Of the 4,300 crores, 3,000 crores worth of orders is signed with the Ministry of Defence, and this is for supply of integrated electronic warfare systems, and the remaining 1,300 crores is signed with the Indian Navy. These are multiple contracts which have been signed over the last 2 weeks. This is to supply indigenously developed fire control and surveillance tracking systems.
All right, Surabhi, thank you very much. Let's go back to Ekta. Ekta, some more news on a few pharma stocks?
Well, yes, I'll start with Lupin, where the UK regulator has completed an inspection of their Pithampur facility successfully. So that's positive news. And also, the US drug regulator completed a pharmacovigilance inspection with no observations, which is basically a scrutiny of practices and procedures for reporting adverse events of Lupin's products. So that's definitely a positive for Lupin. Alembic, their Karkari plant was inspected without any observations by the Brazilian drug regulators, and the US FDA inspected their injectable facility and issued only around 2 observations. So the street should probably take all of these pieces of news with regards to Lupin and Alembic respectively positively today.
Okay, got that, Ekta. Thanks very much. Let's quickly recap our list of top stocks to watch out for. The ones that have positive news flow around them are Crompton, Butterfly Gandhi Mati Appliances, Dalmia Bharat, Paytm, Bharat Electronics, Campus Activewear, Lupin and Alembic Pharma. Stocks with negative news flow around them are Sun Pharma and SBI Card. Okay, those are the stocks to watch today. Let's take it to Manisha Gupta now, who's joining us with a roundup of all the action in the commodity markets. Manisha, good morning.
Morning, Surbi. Thank you for that. Well, the industrial commodities definitely seem to be doing well right now. The crude oil prices, after gaining 3.5% in the previous week, have started this week on a positive note as well. Couple of statements coming in from Russia. One from the Russian president, where he says that they are looking to station tactical nuclear weapons in Belarus. And the other statement was from the Russian oil minister, saying that the output cut of nearly 5 lakh barrels per day in the month of March is on target. So lower supplies and more geopolitical tensions clearly seem to be supporting the crude oil prices there. After all that move that we've seen in the last couple of weeks, we still are trading above 200 days moving average for crude prices. So the chartists also think that there is further support going forward from here. Not just crude, if you look at the industrial metals, we're looking at copper prices trading at a 3-week highs. We did see copper gain up by 8% in the previous week. The copper demand from China has been supportive, and various statements right from Goldman Sachs to Trafigura are suggesting that lower inventories and stronger demand going forward from China could lead to further all-time highs in this year itself for the metal.
All right. Manisha, thank you very much for that. Well, we'll take a break here. We'll come back. Prakash Devan will be with us for some fundamental stock analysis. We'll talk markets with him. Later, we'll also connect with Ansuman Deb of ICICI Securities. And we'll talk about the analyst takeaways in that Interglobe Aviation meet which happened. Stay tuned. All of that comes up.
Is your strategy ambitious enough to drive transformation at scale? How can you design and deliver a strategy fit for the real world? Are you reframing your future, or is the future reframing you? Realize your transformation with connected strategy, transactions, and technology. Reframe your future with EY.
Cashless hospitalization is easy. Get details on our network hospitals at www.starhealth.in. Always at your doorstep.
Be celebrated with the big, bold, beautiful Nissan Magnite.
चाचू, आज मैं पायलट हूँ because you believed in me. Thank you, चाचू.
I believe in one more thing.
क्या?
कि तू मुझे एक अच्छी अदरक वाली चाय पिलाएगी.
सच्चा दोस्त वही जो आपके बारे में सोचे. Personal loans from IDBI Bank. बैंक ऐसा, दोस्त जैसा.
रुक पापा प्लीज, तो मैं आपसे बड़ा चैंपियन बनकर ही घर लौटूंगा.
तू जब तक चैंपियन बनेगा ना, इसका रंग उतर जाएगा.
रंग उतरा? ये रंग तो वैसे भी उतरने वाला नहीं था.
बारिश, धूप और धूल से आपके घर को सालों साल बचाए. ड्यूलक्स वेदरशील्ड पावर फ्लेक्स, घर का चैंपियन.
We protect you anywhere, everywhere. Family Health Optima Insurance Plan. Star Health Insurance. Always at your doorstep.
Welcome back. Hope you're having a good morning. Well, the SGX Nifty is suggesting that at least to kickstart trade, we'll have some green on the screen. Remember, on Friday's trading session, we ended at the low point of the day. But we ran you through our top 10 stocks that we're tracking today. And let's discuss some of those with Prakash Devan, a market expert who joins us on the show. Hi, Prakash. Good morning. Well, plenty of stocks in news. But I wanted to ask you about Dalmia Bharat. They're walking the talk, right? They promised that they're going to be getting out of all the non-core businesses. This is a stock that you like. How would you read this news flow? They'll get close to around 800 crores for exiting that stake that they had in the refractories business.
Oh, absolutely. Good morning, Nigel. So I think it's a very positive move, very much aligned to the kind of commitment that the management has articulated in the past. And interestingly, it's being hived off to the promoter group, which means that, I mean, if you're okay with that related party transaction being at fair value and all, I think the market will take it positively, because this is a time when most large cement players will need to be very agile on the balance sheet, will need the firepower to be able to use this money to expand in the right geographies and incrementally compete against the bigger ones which have already started raising capacity. So from that perspective, this helps Dalmia not only throw its hat in the ring in terms of the big players matching up with the big players in a lot of ways. It also makes it very capital efficient. So I think it's quite positive, and this is one of the reasons why I always like the company. They've always utilized capital very effectively. We've had no accidents in the past as well. So this should augur well for the stock.
Okay, Prakash, good morning. Hope you had a good weekend. The stock that I want some perspective on is Sun Pharma. We've got this news on this ransomware attack, and I think the thing is that there's no clarity on what the immediate fallout is and how much money is going to be invested in shoring up the IT systems again. But, how would you look at things? Because also the stock hasn't fallen too much. It's just some 10-11% off the 52-week high.
Good morning, Surbhi. So I think it's very clearly something which may not be very, very negatively impacting the stock, given the fact that if you see the trend of US FDA inspections and some of the other regulatory agencies, including from the UK and all, there is this positive salience coming back on at least the outcome of these inspection activity. And that's all thanks to the last 5-7 years of very, very strong struggle that most of these companies have gone through, the challenges they've kind of overcome in terms of delivering with the process integrity. And that's the reason why pharma as a pocket is probably what I feel will be a safe haven, and people will want to kind of start allocating more to. The good part on this particular news flow is that IT companies could look at a lot of the pharma names, the big pharma names for additional business, because this is going to get much more commonplace as we go. But I don't think this impacts Sun's ability to continue expanding some of its newly launched products, especially in the US market, and where they have a very strong hold. And their subsidiaries have also started kind of revving up on margins, which has happened after a long time. So I think it's positive. But Sun is not my top pick for an obvious reason, because the optionalities attached to some of the other businesses where things could make significant differences, like Lupin and Cipla and all, rather focus on that. But yeah, this particular news flow might not be so debilitating on the stock.
Prakash, hi, good morning. Now let's pick up two sectors from last Friday. One is the asset management space. Not too many names, but there are a few. So do you think there is more damage here with what was done? And the second is NBFCs, broadly speaking, because there is some concern that cost of funding will go up, because NBFCs many were dependent to varying degrees, between 20, 40, 45% on debt mutual funds as a source of funding. So with lesser inflows into that category, maybe they have to go to banks to borrow, but at a higher cost So your thoughts, both these spaces, AMCs and NBFCs.
Good morning, Prashant. So you're right. Some of the aftershocks of this particular change in taxation treatment for debt funds is going to start reflecting in the second order, third order impact. And from that perspective, if you see on the NBFCs, I don't see any reason why. First and foremost, let's understand debt mutual funds had a very strong preponderance of highly rated, high quality rated paper. We would rarely see things which are below AA plus and all, except for some of the opportunistically built portfolios. But those companies which have good ratings will probably definitely find takers maybe in the direct bond market. In fact, what this is going to do is it's going to start getting a lot of the intermediaries to start building portfolios around direct acquisition of bonds by large investors, especially institutional and HNI investors, not retail maybe. But that's a corollary, or that's a fallout of this particular move. The second thing on the AMC businesses as a whole, while there are brokerages anticipating this may not impact AUM growth, I don't see why it will not impact AUM growth. In fact, the move to FDs is just going to get accelerated as we see interest rates, perk up. We've still had a little bit of a transmission gap. But the moment interest rates inch towards that 10-digit mark on FDs, you'll probably see a significant churn in debt fund portfolios, and that is something which takes away a huge component of the income flow. So it is going to have an impact. The Friday reaction was probably immediate and knee-jerk in that. I mean, was more immediate, not knee-jerk, but more immediate and hence sharper. It could be more calibrated. But I don't think it's going to be on the reverse side. It's not going to start turning favorable just because some clarifications have come through. So it's best to stay away for a while, see what kind of where it settles down, and then probably evaluate them in the new regime of the business model itself.
Okay, so that's on some of the asset managers in the thick of news action last week. Let's focus on now one more stock. We're looking at Interglobe Aviation. The company had an analyst meet last week, and there's a note from ICICI Securities. They seem to be quite optimistic on the stock. Anshuman Dey, lead analyst at ICICI Securities, is with us with a view. Anshuman, good morning. Thank you for joining in. So I think you're quite optimistic. If I'm not mistaken, your target is northwards of 2,400 on the stock. A lot of announcements, including some very ambitious fleet acquisition plans from Indigo. What makes you optimistic?
Yeah, hi. Good morning. We believe that the near-term supply-demand in the aviation space is quite tight, in the sense that a lot of airlines are going through restructuring, replacing their old fleet for new fleet to gain efficiencies. And also, Indian airlines are going to the international market big time. So as their international mix increases, you will continue to face a tight domestic supply. The evidence of that was somewhat visible in the summer schedule, where you only see around 5% growth in capacity. So to that extent, if your supply remains tight, somebody like a large incumbent like Indigo can continue to remain profitable. And some of the quarters like Q3 last quarter or Q1 coming quarter, because of festive season and high demand, can give you good profits. So the tight supply is the main thesis of the sector.
Okay, all right. Hi, Anshuman. Good morning. Anshuman, in the past quarter, Interglobe, they delivered fairly good EBITDA margins, I think around 22.5% odd, which was an improvement. And also the yields were much better. What kind of a number are you working with? Can they better this number, or do you expect it to stabilize in this sort of a zone?
So we can't ignore the seasonality. Q4 would be, somewhat lower than Q3. Again, Q1 would be much better than Q4. Having said that, if you look at the spreads, we factor that when in FY16 to 18, company was doing profitable business before COVID and other headwinds came in, they were doing an average spread of somewhere around 38 paisa per ASK. And I think the company, our view is that should be able to maintain northwards of 25 to 30 kind of a paisa per ASK spread easily, considering the demand that we see and also the supply constraint that we were speaking about. Also, we remember that international is more profitable as of now. So, that also adds to the spread thesis.
Okay, what do you think are going to be the biggest watch factors? As you mentioned, market is tightly supplied. What are the immediate triggers for the stock?
The immediate trigger, the earnings have been good in the sense that Q3, as you said, was good. And we expect, the earnings in FY24 and 25 could be, on similar lines, quite good and because of the supply scenario. But the near term would be whether crude moving down creates an extra alpha to that earnings estimate, or whether the multiples react to that, because ultimately a commodity has a big call in that sector. But also, the other factor is that we have to see how the competition pans up. Some of the competitions are looking to negotiate with lessors for restructuring of their payments and restructuring of their fleet. That is also something which can impact the overall space.
Okay, Anshuman, we'll leave it there. Thank you very much. Good speaking with you. Appreciate you joining in. Quick chat today with Interglobe, very much in focus. Prakash is still with us. Prakash, Before I take another quick commercial break, let me just ask you to answer 2 or 3 stock-specific questions. I don't know if you've looked at Campus lately. We did, I think, speak middle of last week, and you said valuations are still high. And then there was this block. There was hope that it would be kind of a clean-out trade, and this with the overhang going, maybe it'll attract some buyers, but did not happen. Stock ended at the low point of the day on Friday. Any thoughts here?
Yeah, I so continue to reiterate that view, Prashant, when Nigel and I discussed this briefly. Valuations will still be, they're still kind of demanding in that sense, because the earnings profile of the company hasn't radically changed, okay, as anticipated at the time of the IPO, the way it was projected to go. It's a wonderful brand. There's great acceptance. But, the demand side is still not as promising that you could kind of start penciling in higher revenue numbers and margin improvement. So what's going to happen is, till everybody who's been holding on to it is tired of holding on to it, only then the new buyers come in. And this was just a block that just exchanged hands. I mean, some fund went out and some funds came in. But the fresh incremental buying is something which would probably take some time. The P might remain constant here, but the EPS could show some growth, and that's the time it could kind of start. So there's a time correction for sure, if not a price correction anyway.
Okay, all right, Prakash, stay on. We'll take a very quick break, and as we do that, let's tell you what's lined up for the next half hour on the show today. Coming up next, Anuj Singhal joins in for a quick take on the setup this Monday morning. We'll also get in our technical and F&O experts to give us some trading advice. We'll decode the stock rally with our Momentumizer segment at 9:10. Nimesh joins in with the standout brokerage report of the morning. And before the market opens in the CNBC-TV18 Stocks Board, we will highlight the top stocks in news to focus on today.
Okay, welcome back. There's 12 minutes to go for the pre-open session. SGX will come up on your screen, still indicating a near 90-point uptick. Anuj is here to tell us how he is looking at the trade setup. Anuj, hi, morning.
Morning, Prashant, Surabhi, Nigel. I'm taking a bit of a departure today from the norm and starting with the Bank Nifty, because it could be a huge week for Bank Nifty. Remember, it's a monthly expiry and it's a truncated week, and the expiry has been preponed by a day. The Bank Nifty made a weekly inside bar last week. What is that? Basically, the high of low of last week was within the range of previous week, and I think that makes Bank Nifty poised for a 1,500, 2,000 point move. I mean, ask me which side and I won't answer because I don't know. And that's the million-dollar question, right? But the previous week range was 38,613 to 46,690. It's that kind of a range. On the Nifty, of course, repeatedly defending 16,800 as the last line of defense. And the broader market has seen a lot of pain. So I am still inclined more towards, the range breaking on the downside than on the upside. Especially on the Nifty, where the recent low of 16,828 is now a line in sand. But, almost everyone has placed their stop losses here, and the market may not be that obliging. If it breaks, then it leads to a bigger fall. On the upside, the big resistance is 17,225. If you see the high of Nifty over the last 4 or 5 sessions, whenever it's attempted a rally, it's always between 17,200 to 17,211, somewhere around there. So 17,225 needs to be crossed for further short covering. But my sense is any rally towards 17,100, 200 would be used by bears to actually create fresh shorts, like you saw on last Thursday.
Okay, all right, Anuj, thanks very much. So Anuj is saying perhaps more chances of a downside break than an upside rally. Let's take the conversation forward with our technical experts. We have Mitesh and Sudarshan joining in. Good morning to both of you gentlemen. I hope it's a good week that we are looking at. Sudarshan, I think that's the critical question that all of us have been discussing, that will the range hold or will the bears ultimately prevail this week? What are what's your strategy for the index to begin with?
Good morning. See, the market, the Nifty's eventually landed up in a trading range with 16,800. That number is something that we all understand. That's support. And to me, 17,150 is resistance. Now, inside this trading range, these 90-point upticks that we are seeing for the open or some decline, this is essentially noise. It has no meaningful, sense. So I think it's best to ignore that. Understand that the market is in a range, and only a range breakout or a breakdown will give us a profitable trade. Now, to a question of where this breakout will happen, up or down or breakdown, I would go with Anuj and say that eventually 16,800 will break on the downside. What's today's trade? Today's trade is in this trading range because there is some kind of an uptick. Keep 16,900 as a stop loss, wait for an intraday dip and buy. This is not, won't get much out of it because the big trade will come when the range breaks.
Okay, all right, I got that, Sudarshan. Thanks a lot for that. Mitesh, what about you? Your view on the Nifty and the Nifty Bank?
Yeah. So, good morning. One, I think, I also would believe that the chances of a breakdown are much higher. Though the market has been doing a range of broadly about 17,170, 17,200 to about 16,850, 820, I think eventually the range has got a stronger chance of breaking on the downside purely because of the fact that the weekly and the monthly charts have seen indicators kind of start turning negative and southwards. So overall, I think while today is a gap up day, I would not be very excited about this gap up. I think, in fact, till we cross 17,200, I think I would not want to venture into an aggressive long. But closer to about, let's say, 17,150, in case we get it in the next 1-2 days, if this gap up sees mild follow through, then I think I would even look at getting into put options on the Nifty. So negative view, but for the timing, it's just a range kind of market. Closer to 17,150, I'll be more inclined to take short positions.
Gentlemen, good morning, both of you. Let's get into specific trades and ideas. Sudarshan, what would you recommend?
Well, it's a new week and we are going through Navratra, also Ramzan. So let's start with some cheer today. I have Siemens as a buying opportunity. Siemens is a buy. See, if you see the chart, it's making new highs. Now, that's remarkable. A strong relative strength, a good quality stock making new highs justifies a positional trade. All my buys are positional trades, nothing intraday. So buy with a stop under 3,200. The only intraday short is RVL Bank, which is in a bear market. Consider an intraday short with a stop above 141. Shree Cement is another stock that is similar to Siemens. It's now in a trading range after making new highs. That trading range should break on the upside. A positional buy with a stop under 25,000. And finally, Crompton is not a positional buy. It's a swing trade. Maybe it's made some lows and maybe we can see a relief rally. Lots of maybes. Buy with a stop under 285.
All right, so those are some ideas from Sudarshan. Mitesh, what about you? What are the stock calls for the day?
So I have 2 buys and 2 sells. I think on the buying side is Ramco Cement. Keep the stop below 730. Look for targets of 770. Chola Finance is a buy. It's come down to gap support area. So that's a buy with a stop at 715. Targets of around 750 here. And Tata Power, if it starts trading below Friday's low, that's a candidate for shorting. So sell below 192, keep 10 stop at 195 half, look for 184 as the target area. And Jindal Steel on a bounce back, let's say around 540, get into short position with a stop at 552 for targets of 515.
Okay, well, those are individual trades. Gentlemen, we'll take a very quick break here. Thank you very much and come back to you for your 9-10 ideas. We'll come back with the pre-opening rates at 9 o'clock, 5 minutes from now. The NBFC space, we get into a little bit more in terms of detail. Digant Haria of Green Edge Wealth Services joins in to talk about how NBFCs will be impacted. Will they be really hit because of debt mutual funds seeing taxation changes will flows into them reduce? An important source of funding for NBFCs overall. Stay with us.
Cashless hospitalization is easy. Get